Assalamualaikum sir. So our group choose Apollo Food Holdings Berhad Company for the group project to make a trend analysis based on yearly performance of financial statement. The comparison is made between the year 2018 and 2019.
Financial Analysis Report is a document that can stimulate significant investor confidence with the comprehensive evaluation of the financial health of company. So the main objective of this financial analysis ratio is to know the financial strength and weaknesses of Apollo Food Holding Berhad. We want to know the company's performance such as the liquidity and profitability. We also can examine the capital structure of the company by using a leverage ratio method, where the result can be used by offering reasonable recommendation for better performance of the company. So the ratio determined by using trend analysis, which is a time series. Here we will define the trend analysis of Apollo Food Holding Berhad for 2018 and 2019.
Hello, I'm Farhana. So I will continue for the liquidity ratio, which you can see in the graph where the current ratio shows 17.86 and 15.71 individually in 2018 and 2019 for Apollo Food Holdings Berhad. As for quick ratio, 2018 also surpassed 2019, which 15.99 and 14.11, meaning that in the year of 2018, it shows the company has enough current asset to be converted into cash in meeting their short-term obligations. Okay, for the net working capital, the result shows that it is in the positive amount for Apollo Food Holdings Berhad, and it's improved from the year 2018 to 2019. It means that the company has enough current assets to meet its current liabilities. If all the current liabilities are to be settled, the company will still have the value stated in the graph for the year 2018. Also, it increases to the value stated in the graph also for 2019. Generally, a high net working capital is a good sign for the company.
There are 5 items in activity ratio, such as inventory turnover, account receivable turnover, fixed asset turnover, total asset turnover, and average collection period. Inventory turnover. We can see that inventory turnover for 2018 is 10.1, while for 2019 is 9.1. It means that in 2018, they replenished their inventory more than 2019. They made a lot of goods sold in 2018. Account receivable turnover. It indicates the efficiency of the business to turn its account receivables into cash. The account receivable turnover for 2018 is 6.46, while in 2019 is 6.37. It shows that in 2018, the business is more efficient to turn its account receivable into cash. Fixed asset turnover. For 2018, the fixed asset turnover is 1.58 times, while in 2019 is 1.66. It indicates how efficient for the company to generate sales through their fixed asset. Even they reduce their fixed asset in 2019, they still capable to generate higher sales. It means they use their fixed asset more efficient in 2019. Asset turnover. This ratio indicates how efficient the company use their asset to generate sales. Based on the figure, total asset turnover between 2018 and 2019 not much change, from 0.72 to 0.71 times. In 2018, they use their assets more efficient than 2019. Average collection period. The average collection period from 2018 to 2019 is remained unchanged, which is 57 days. It means that this company not having a big problem in collecting their debt from debtors.
Gross profit margin represents the amount of profit made before we deduct the purchases, general and administrative expenses. As we can see, the gross profit margin shows the percentage in 2019 is higher than 2018. This means that the company have better ability in managing and controlling the cost of goods sold relative to its sales revenue in 2019 rather than 2018. The net profit margin measures the amount of each dollar of revenue left over by an organization after paying all of its expenses. We can see in the graph, a company have better growth prospect in 2019 better than 2018. Therefore, a company has better income for the shareholders to earn. Operating profit margin is a profit of sales of the company after paying variable costs but before paying any taxes or interest. So the graph regards that the company generates higher productivity in 2019 compared to 2018. This means that they also can provide better returns to the both creditors and stockholders. So the next is a return on asset or called ROA. ROA provides an idea to a manager, investor or analyst on how effective the management of an organization using its asset to produce earnings. According to the graph, the ROA in 2019 is higher and better than 2018, which means that the company effectively utilized its asset into earnings with a low cost in the operation. In 2019 is better than 2018. So the last one is ROE or return on equity. Basically, ROE evaluates only the return on equity of a corporation, leaving out the liabilities. Thus, ROA accounts for the debt of a corporation, but ROE does not. So, the more a business takes on leverage and debt, the higher the ROE would be compared to ROA. As can be seen from the graph, the ROE in 2019 is higher than 2018. This indicates that a company can provide higher return to the shareholders of Apollo Food Holding Berhad in 2019, where the company able to control the cost, goods marketing strategies, and good coordination of cross departments.
As for the leverage, or also known as solvency ratio, in the graph show for debt ratio and debt to equity, the company shows its debt ratio is higher than its debt to equity ratio in the year 2018, which is 3.04% and 2.4%, but lower in 2019, which is 3.65% and 3.97%. It known as a conservative companies also means that the business uses less of debt to fuel its funding. In other words, Apollo Food Holdings Berhad show a better operating performance in the year 2018 than 2019 because it did not reach 50% of the debt ratio, which known as leverage company. Next, for the time interest earned ratio, it measures a company's ability to continue to service its debt. It is an indicator to tell a company if they are running into a financial trouble. The time interest earned for the year 2019 is higher than 2018, which is 8.75 and 6.13 respectively. By the year 2019, the company has a higher capacity to service their financing costs compared to the year 2018.
Earnings per share or EPS is a part of Apollo's profit allocated to each outstanding share of common stock. The diagram above shows data of the EPS of Apollo from year 2018 to 2019. Based on the graph, the EPS from the 2 years increased from 13.84 ringgit to 21.78 ringgit, the decrement by 7.94 ringgit. The average of EPS for 2 years is 17.81 ringgit. Price earning ratio is the opposite of dividend payout ratio. When the low dividend payment is low, retention of earnings will be high. This shows that there are more earnings being retained into the company for further investment. The diagram above shows the price-earning ratio (PER) of Apollo from year 2018 to 2019. Starting from year 2018, the initial price-earning ratio is 0.22 times. The ratio decreased to 0.14 on 2019, the decrement by 0.08 times. The average for price-earning ratio for 2 consecutive years is 0.18 times. Based on the series of data analysis of Apollo company between year 2018 and 2019, we can conclude that this particular company indicates the lack of efficiency and their moderate ability to manage their finance and management throughout the year. Based on the observation in the ratios, in liquid ratios particularly, the firm managed to get fair result as overall measure of their ability to meet short-term obligation as they come due. The company also gained moderate score on market ratio analysis since earnings per share (EPS) from 2018 are higher than 2019, which is good, while the price earnings ratio depreciate as it is underperformed. However, they obtain a good score of activity ratios and profitability ratio. This shows that Apollo company have an improved effectiveness handling its asset and firm's overall business operation.